Welcome everyone to another episode of Price Targets with your host Bitcoin Jack. Welcome back. It's Monday. We're going to be looking at quite a few things in today's video. We're going to be looking at the hash rate dropping, what that means for Bitcoin. I believe that Bitfinex shorts are covering, so we're going to be covering that too. There's going to be a few charts of Glassnode based on chain metrics that I'll be discussing as well. And then obviously we're going to review the price action at the mid-range of the current range, some bullish triggers, bearish targets, and hopefully that will be enough to, prepare ourselves for the week to come. First, let's get our sponsor, Prime XBT, a little bit of attention. They are sponsoring this content, so if you like this content, please consider using the ref link in the description below / in the watermark and use the promo code BitcoinJack to receive 50% bonus on your first deposit with them. There's some conditions that apply, so make sure you're aware of that. But thank you, Prime, for making these videos possible and sponsoring. Right. This is hash rate, so most of you must have known for a while that a lot of miners are getting out of China, and in the last couple of days the hash rate is just it's dropping super sharply. Hopefully this means that they're just moving to other areas in the world and that this hash rate will come back online. And for now, it just makes people a little bit, how do I say that? It makes them scared. It should not be too much of an issue as long as this hash rate comes back online. If these miners don't intend on, getting back into Bitcoin, this might just be some kind of exit. And then, that is not something I fundamentally would like to see. So hopefully we're going to see this hash rate coming back online. I'm just going to be a little bit cautious as long as it doesn't. I think that once it starts to recover, that's going to improve the morale and the sentiment. It's just a chart to keep an eye on. I think the difficulty adjustment is going to be downwards like 25%, so that's a lot. And then the other thing that Twitter was talking about constantly over the last couple of days was the Finex shorts that were loaded, and actually quite a few shorts, but they're covering. So a short squeeze is a lot less likely at this point. That's all it kind of tells me. That doesn't mean that we're just going to go up, but it just these shorts can't be squeezed out of the market anymore. And when it comes to liquidity and reliability of data, Finex is always king, in my opinion. And Finex just dictates the market, in my opinion, when it comes to volume and liquidity. So this kind of tells me that a short squeeze is less likely. These shorts can't be squeezed anymore. And that's kind of all I can say about it. The fact that we had this kind of, shorts piling up on Finex made me kind of afraid that this could be actually become a squeeze, and now we'll just have to wait and see what happens. But that kind of risk is gone. So up or down can still, happen the same way it could before these shorts started to pile up. And there's a lot of people who said like, okay, well, last time when shorts started to pile up, we dumped, etc., etc. I'm not really the kind of guy who kind of looks at things that way. It's just too much. It's you can't say because something happened in the past once that it will have the same effect now. So I tend to avoid making decisions on those things. But the fact that the open interest on the short side here is gone is reducing the scenario of a short squeeze, which would mean bullish price action. All right, that's it on that side. We're going to be looking at the actual price action here. For Bitcoin right now, we're still capped by the mid-range, this one here. And I've been charting it on a few different exchanges, but I do think that this mid-range kind of aligns with the high here on the 3rd of Jan. So basically, you can either use this one or this one but that's kind of, the resistance right now. Are we necessarily bullish or bearish here? I think that the squiggly we had last week kind of behaved as expected, basically get down to the 28.8 level. I think that was spot on. Yeah, that was absolutely to the dollar. And then the retest of the range low as it reclaimed it back inside, that kind of worked out into the mid range. So this kind of play is, for me technically is over. I wouldn't hold this waiting to go up there. And for me to become bullish right now, I would probably long. Depends on kind of how things develop, but if I remove the squiggly here, I would probably be eager to get long in this range here. But before I do that, I want to see price to at least come up here back to the range high, and then I'd be eager to get long at mid-range to slightly below it if I get the chance. So it kind of depends on what's going to happen from here. If price is just going to rate these highs and then just put in the high of the week tomorrow, and then sell off, or that we actually going to see bullish price action into the range high. If we get into the range high, then I do think that this is kind of, well, it's not truncated, but it would be fitting for a fifth wave on the way down, and then this was just our low, and then I think the bullish price action will actually resume to go and test 50, 45, 50k. For now, I'm still skeptical, and I haven't been trading this kind of range much, and I just want you to know that I do think that this may become the bottom. So until we actually retest the range high and then come down, I'm not going to be long this. This is resistance at the mid range, and I'd probably, well, if you put a gun to my head, I still think that this is going to sell off into lower levels into the start of July, mid of July. So, and then one last thing on the subject of this being the fifth. I think I've drawn it before in other videos, but basically this would be wave 1, this would be wave 2 correction, this would have been the third, and then this is kind of, well, not entirely truncated, but didn't really rally much, just rate the low of the fourth or the third wave, and then set us up for a relief rally. So that's kind of what I'm seeing right now. The other thing that this is much more of a macro thing to be looking at is the amount of supply of short-term holders at a loss currently. And usually what you see is that, during capitulations, let me change the color here. You'll see the blue line spike, which means that there's more short-term holders supply at a loss. And once that kind of, retraces to pretty much normal levels, that's usually where there is an opportunity for continuation of the trend, or at least, what it does mean is that people who were at a loss started selling. This metric can come back down because price actually comes back up again, but at the same time, this metric will come down as people start selling. So these holders, the short-term holders that were buying up here, are all at a loss, or, well, not all of them, but about 4 million coins are at a loss. So essentially, if they start selling here, which means they're capitulating, then this comes down here, or if price comes up back up here, this obviously will go down, and holy shit, right, I just broke a glass. Let's continue. I'll fix that later. So in reality, it's probably two things that happen at the same time. So for a macro perspective, to even consider the continuation of the larger trend, so if you subscribe to the idea that we may have like a 2013 kind of correction here and then continuation into new all-time highs, then one of the things to really aid that idea would be to see this blue line come down, and the most ideal thing, or the most bullish thing that in my opinion could happen, is that price doesn't even retrace as much, but this blue line starts coming down, which indicates that the short-term holders are capitulating their positions that they took up above 47. So that's kind of, I think that's an interesting approach to see for the macro, whether we can start bidding hard and bet on that upside bullish market cycle continuation. I think that pretty much covers it. We haven't really talked about downside targets. For me, this is resistance right now, and this could start selling off. This is not really that bearish at this moment, but once you start coming down again here and you really start to lose it, then I think we're going to be testing 24, 25, 18, 19, 20. That are pretty much the two levels where I'd be starting to heavily bid and even get my margin on. And for now, I'm just waiting here in the range. Then let's have a look at ETH quickly. So yeah, that kind of shit the bet, and what happened is we rated the low as we talked about it, and now we're kind of seeing a little bit of a reaction. So I think this is going to rally, but what I don't like at all is that this is kind of closing back inside this trend line. Essentially, that kind of gives me the vibe that any rip is an opportunity to short it. And I don't, maybe things will change, but I think we could have a little relief rally here, maybe even all the way into orange, and then come down to the 0.046 level at the green line down here. So yeah, not really too keen, not too bullish. Probably want to get some interaction with this trend line here and then sell off through the gray level. So I think that's kind of it. And then we talked about Litecoin. I had some bids on Litecoin and I didn't really like the bounce too much, and then I kind of sold at 3,800 and kind of continued upwards into 4K sats, but I'm just not going to touch this one at this moment, and just leave it be. Let's see what Bitcoin does. And I kind of hope that this big kind of candle could resolve in some kind of reaction like it did here. It absolutely did not show that intention here. So even if it does it afterwards, for me at this point, at this current state of the market, it just doesn't make sense to take a whole lot of risk, especially if Bitcoin remains neutral to bearish. Then there's just not a lot of alpha in bidding this, because this can go up, and I would stack sats. But the question is whether you'd be better off in cash at that point. So technically, I do think that Bitcoin could start to reverse. I'm not going to bet on it until we actually retest the range high and then a retracement. And until then, I think that there's a good possibility that we're going to come down here again. And this is not going to hold again. So if this is either a fifth wave of that larger trend here, or it was the first wave of the fifth wave, and then shit is going to come down a whole lot more, we could get ourselves couple of, let's say that this is the current high of the rally, and then a 1-to-1 extension gets us at 24, and then the 1.618 gets us below 20. So this is a place where you should be patient and know that there's still downside risk. I'd rather have this rally a little bit, and then once it kind of confirms bullish market structure, then buy into it on a retrace. Hope that makes sense, and I'm going to catch you guys later this week. Peace.